Hello and welcome to another trading day right here in Lagos, Nigerian Business Incorporated, live from Channels HQ. Here's what's coming up in the next 55 minutes. The National Monetary Fund says Nigeria's foreign reserve is expected to see a significant reduction, falling to $24 billion in the year 2024. And total value of trade between Nigeria and Egypt stands at about $143 million in 2022. And the value of dollar deposits held by Kenyans and local banks rose by 68% to a record 1.55 trillion shillings in the 12 months to December 2023. And it's great to have you join us. I'm Ladi Williams. Let's get the top stories that set your agenda now. We see oil prices fell in early Asian trade today after Israel said it had concluded a series of strikes in southern Gaza, slightly easing concerns about supply from the Middle East. So see price action now. We see 1% big drop there, $81.37 a barrel. That's for Brent crude. And we see WTI crude, that's at $76.10 a barrel. That's also down 1%. So it sees geopolitics pushing sentiment in the market at this time after a record close last week. So we're seeing WTI there as trading down 1%. And definitely, this is going to drive sentiment throughout the week. Geopolitical risks, including a feared broadening of the Israel-Palestinian conflict across the region and potential oil supply disruption in the Middle East, pushed prices up about 6%. That was last week. So it was a good outing last week, but we're seeing the week starting off quite low. Today. Well, let's look at the metals market now. See gold prices steadied in a tight range today in a holiday-thin trading as investors await remarks from a slew of U.S. Federal Reserve officials. They're going to be speaking a lot this week. We're looking out for what Fed have to say. We see gold there down 0.19%, $2,034, still maintaining that psychological level above $2,000. Silver is up 1.64% at $22.96 per ounce. So we see palladium, that's also holding up there, 1.23% up, $880. See, U.S. Gold futures were also steady today. Definitely still investors are looking at the safe haven assets, definitely looking at risk on or risk off sentiment, depending on what the Fed officials say. That will drive sentiment in that market. To other stories now. Total value of trade between Nigeria and Egypt stood about $143 million as of 2022. The commercial first secretary and head of Economic and Commercial Office Embassy of the Arab Republic of Egypt, that's the ambassador there, confirming that in Lagos over the weekend during the launch of the Economic Community of West African States and Friendly Countries Trade Fair. That's Lagos, Nigeria 2024, in collaboration with the Lagos State Government. EcoFair is a business initiative that promotes intra-Africa economic integration through regular economic activities across the sub-region. It seeks to create a common business platform for regional entrepreneurs across various sectors and countries. Definitely hoping exporters can take advantage of that. Well, in a concerning forecast by an International Monetary Fund, Nigeria's foreign reserves is expected to see a significant drop there, falling to $24 billion in the year 2024. This prediction was detailed in the IMF's latest country report for Nigeria, signaling potential challenges ahead for Africa's largest economy. As of February 8, 2024, data from the Central Bank of Nigeria positioned the country's foreign reserves at $33.12 billion, indicating a substantial drop on the horizon. That's according to IMF's projection. So definitely we're discussing that, going forward, see the potential impact of that. Well, to other matters now, agriculture experts are seeking legislation that would deter unscrupulous traders from engaging in unwholesome practices in the sector, especially relations to the sale of planting materials. Research experts at the Nigerian Institute for Oil Palm Research, NIFA, Edo State, spoke with Channels Television on the negative effects adulterated planting materials have on investment in the Waktar crew through the oil palm sprouted nut production process. Take a listen.
The oil palm, a single-stemmed tree with leaves known as fronds, is cultivated as a source of oil. Its fruit comes in bunches. The individual fruit has an outer skin, a pulp which contains the palm oil, and a nut surrounded by a shell. The Nigerian Institute for Oil Palm Research, NIFO, is about 85 years old. Its main station in Benin, Edo State, sits on 1,735 hectares of land, part of which its oil palm plantations occupy. The acting executive director of the institute, Mr. Goldisona, highlights the economic importance of the oil palm.
From government policy through seed production to nursery seedling production, to cultivation, maintenance, and processing, and the different stages of processing to produce different derivatives, of the palm oil and palm kernel oil. You find that so many people, men, women, youths, are all involved.
This list of abundant opportunities in the oil palm value chain easily attracts farmers and investors.
We have the capacity, we have all the human resources that are, required, and we also want to make people understand that, the seed is the most important investment in any agribusiness. Not the money, the seed. If you get the seed wrong, the business is ruined.
There are three main crop types for cultivation in plantations: Dura with a thick shell, Piscifera with no shell, Tenera, a hybrid of the two. According to information from the Institute, its research breakthroughs include the demonstration of the value of the Dura and Piscifera cross, which gave a progeny consisting exclusively the desirable Tenera thin-shelled form. The climax of its early efforts is said to have been the release of the D&P Tenera hybrid extension work seed, whose yield was more than 5-folds of the unimproved growth plants.
In terms of oil palm planting materials in Nigeria, the only authentic source is this institute, and it's the only institute, the only place where you have a seed processing facility into sprouted seeds.
We remove it from the Florida. You see,
the stages in the production of the sprouted palm seed are many.
This one is already bagged. It's inside. Now, after bagging, assuming today, the fluorescence will mature in the next 7 days. You will now see the flower, the anthers, they will open from inside.
The other ones, they are from feed 2.
The fruit, after harvesting, is left to ferment for 7 days, after which it is taken to a water trough, where it receives special care for another 7 days. This gives room for separation of the seed from the pulp. The seeds are then sheet dried and brought to this seed store, where they remain for months.
You can see already the pulp seeds after sheet drying. They are inside the rack.
A heat treatment room is another section where they receive more care.
From the seed store, like I said, we take them to the water for 7 days, after which we bring them to the heat treatment room. I told you in the seed store, they are said to be dormant. But here now, we want to break dormancy. Okay? They'll be here for 80 days.
Having undergone another successful trip to the water trough, the seeds make it to the cooling room.
The temperature here is at 26 degrees centigrade.
From there, they are taken to the sprouted seed store.
You can see them now. The capacity here is still around 50,000. We also need expansion. It's too small for us, because you can see we are still picking, we are still sorting. Though we have another store there that we are still going to load through.
The entire production process runs for about 1 year. Each stage is described as essential to a positive yield for the oil palm. As the head of the training division in the institute emphasizes, those who deal in the sale of adulterated planting materials hardly have the capacity to follow such intricate processes.
Beyond us, there must be some level of control, some level of legislation to at least deter people from hurting others by developing and selling adulterated materials for farm, because this is a long-term gestation crop. And these crops, if you plant another treated material, it will take you 7, 8, 9 years to realize that you have planted the wrong thing, and that will be after very, very serious investment.
The experts also advise investors to ensure they exercise due diligence, which translates to consulting the institute when going into oil palm seedling nursery or oil palm plantation cultivation. Jessica Olubusere, Channels Television News.
All right, it's another trading week, the beginning of another trading week right here in February, and company results are still rolling in from the 2023 financial year, unaudited results, and also get some different earnings. Some companies that have different calendars at this point, and also other happenings in the markets. Join us now as Nnamdi Wizu, co-managing partner at Commercial Partners, joining me via Zoom. Great to have you on the show.
Great to be here, thanks.
Yeah, fantastic. So definitely we're seeing a couple of results coming out, and that have already come out the past couple of weeks. And, some of these companies, they've released some, interesting results, quite impressive, at this point. But talk to me about all the results you've seen and what they're telling you about the state of these companies and what to expect when it comes to resilience, of these companies in 2024.
Thanks, Roddy. So, looking at these results, I think we have two tails. The story is all about CNN. So you have those who have gained from currency depreciation, and then you have those who are struggling or recorded huge losses, basically due to the fact that you have the currency depreciation. So it's almost like a tale of two different sectors. So if you look at the FMCG, most of them seem to be struggling or seem to be reporting lower profits, lower, let me say flat revenues in some cases when you compare to dollars. But basically profitability has dwindled, some even going into losses based on the fact that they've had to take huge hits on what has happened with the currency. If you look at the banks, results that we've seen so far, and the tech results seem to show that still benefiting largely from the currency depreciation and the fact that they have huge dollar reserves. So if we were to look at, say, an Airtel that recently released their results, you would see that despite the fact that they grew their customer base by around 9%, right, to about 151 million subscribers, they took a huge hit on the currency, and not even just in Nigeria, but Nigeria, Zambia, Malawi, Kenya, so all across, sub-Saharan Africa, you can see firms that basically cover all those countries struggling to stay afloat. Airtel shows about $740 million loss in losses from exchange rates alone, right, which basically took them to profitable tax of just about $2 million from $520 million last year. So, also looking at PZ, which would fall into the FMCG sector, basically the same thing. If you look at their results, and that May 2023, before you had the whole depreciation, looked pretty impressive. They had about 114% growth in profitability. But by the time you go into their Q2 results, their own financial year starts in May. You look at where they got in about 30th, they're recording huge losses and still down to currency and depreciation, and basically just trying to stay afloat around that whole spectrum.
All right, definitely there is a cost of living crisis, at this time. We've seen a couple of states in Nigeria, people coming out to protest, at this time. And definitely that would have an impact, in investing. When you look at people they're looking for money to feed, at this time. Talk to me about what you're expecting, in 2024 from retail. That's looking at investments coming from retail. Are you expecting, some kind of drop or resilience?
Well, a lot really depends on how well the central bank and also the fiscal side can sort out currency issue. I think a lot right now is backing that. We have huge inflation, imported inflation, local inflation, all off the back of what's happening with currency, right? So to say or to be able to predict what will happen, one needs to be able to predict what exactly will happen with the currency, which so far has been pretty tough because I'm sure you had asked this last year. Very few would have predicted that would be at 1,400 dollar at this point in time. However, we have started to see a bit of interest. Some foreign investors, starting to look at Nigeria coming in. I think the central bank is beginning to raise rates and trying to buy investment on that front. So hopefully with that, we should see some weakening of currency, which should also translate to a reduction in prices of things like diesel, petrol, and also generally help the retail sector, right? Because until right now, the purchasing power of people of the retail sector really struggling. You have prices shooting up, but salaries are not going to meet those new price ranges. So what's basically happening is that people are struggling to meet up with the rising cost of goods. I think the people who might benefit in terms of the retail sector might be the local manufacturers who, basically focus more on just local goods, and hopefully people will look to them as a substitute for the imported goods and hopefully get a bit of a boost from that segment. But still, you can't discount what happened with prices.
Definitely, this would lead to some kind of demand, destruction, going forward. But how do you see this, rubbing off on most of these listed companies, when their earnings come out for 2024?
Well, like I said, we've already seen a few of them, PZ, Scene, Airtel. So we've seen a few of them showing us the effects of currency. So if I'm looking at their results for 2023, for most of the FMCGs, I expect to see them take huge hits based on what's happening with the currency. But going into for end of year 2024, like I said, it's a bit difficult to call, but I think things might have stabilized now. They seem to have. So we should start to see them pick up again. And hopefully, if we can get real inflation, then the demand will start to pick up again, and then you can see them bouncing back from the losses that we expect to see, or the reduction in profitability that we expect to see going into results or earnings periods that are going into right now.
Let's look at stocks worth over 1 trillion naira. We saw a couple of them added to the lists. That's whether the market was quite bullish, talking about the NGX. But we saw the introduction of 6 new stocks into that category of SWOOTs, as we fondly called them. We saw United Bank for Africa, Access Holdings, Transco Hotels, FBN Holdings, and Geregu Power. All of them, got into that list. But a couple of them have left that list now. Just Geregu, maintaining, at this time. What is this telling us about these companies?
Well, SWOT's an interesting one. As at last year, February, about this time last year, I think we had just about 5 companies that had hit the 1 trillion market cap. And then at the peak for this year, the position that we had, so we got about 14. And now we're down to about 10 companies that are still there, still soaring, still in the SWOT category. I think what we've seen has been quite a bit of profit taking because we've had a huge rally over the last 1 year. If you look at the UK, for instance, it's gone from 835 cover to 25 now, so it took about, that's 12%. If you look at the likes of Transco Hotel, it's gone from 6 naira to 97 naira. That's huge. So, what you expect would be that you have some profit taking coming in eventually, which is what we're seeing now. But still, if you look at them compared to what has happened with currency, you can still say that the stocks still look very cheap. And I expect to see some of them that have dropped out to come back into, the swaths when we start to see markets or when we get to the industry of challenge functions. The likes of UVA, Access, and MPN, we're expecting to go back to swaths.
And I guess a bearish run has a way of pulling most of these stocks out of that level. We'll see if they'll get back in if the bulls return again. But to another sad one now. We got that sad news over the weekend with the passing of Mr. Herbert Wigwe, his wife, his son, and Mr. Bamafin Bimbola Ogunbanjo, the former NGX chairman. And definitely a painful exit at this time. But paint a picture, the kind of gap this loss creates in Nigeria's financial industry.
Very sad news, very heartbreaking. You basically created a gap that it's going to be a big struggle to fill. He was a visionary. You could see that with what had happened to Access in the last few years. The massive acquisition that we've been doing in the last 1 year. And even with the mission around opening the university and starting up the Wigwe University, that just tells you, where he was going. He was bullish. He seemed to be very pro Nigeria. Looking at, I attended an event where he was talking about the school. I can see how passionate he was about the school. And it's really heartbreaking that it's all come to such an early end. And pray for the souls of the departed, and I would like to go to comfort.
May the souls of the departed rest in peace. Thank you so much for coming on, Mr. Nnamdi Uwizu, co-partner at Commercial Partners. It was great having your perspective today.
Thank you.
All right, we'll take a break now. When we come back, we head straight to the markets. To stay with us, there's Business Incorporated. All right, let's head to the markets now, and we have Ini John McCrory. She's going to be giving us the details this week.
Yeah, well, I guess the week is still early, so we have to do a recap of how the week traded, how it traded last week, and then we can now follow up on this week. So good afternoon and welcome to the market segment of Business Incorporated. We begin with Nigeria, and we can tell you that the NGX has recovered at intraday 0.25%, and yes, we have gone past 101, which is what the market closed with on Friday. Now it's 102,115.56, 0.25% up at intraday. South Africa is, however, in the red. I remember when it was a norm to have South Africa at 74,000. Unfortunately, these days we have them at 73 or 72. So for intraday today, 73,193.31 for intraday. It's in the red. If we see the Egypt and the others here, Egypt is also in the green, just like Nigeria, 0.50% at 28,339.24, while Kenya has Friday's deep red close at 0.85%. It lost, getting further away from its 100,000 units that it would normally be known for. If we can see other market now, let's look at Asia or the Middle East. Abu Dhabi is also for intraday. It's in the red, 0.14% at 9,330.84. Dubai is on the flip side, 0.54%. We see right there, 4,200. Plus. Saudi Arabia and Qatar are both in the green, 0.17 and 0.49%. That's what we have right there for those markets at intraday. Okay, so let's look at Asia at this time. There you have the Nikkei 225 is in the green, 0.09%, and Kospi is 0.41%. The Hang Seng Index is on the flip side. We know there's a holiday going on, so it's a shortened week for the Asian markets this week. They have a holiday for this week. Shanghai is looking so good, 1.28%, while S&P 200 is in the red at 0.39%. Now let's I come back home to Nigeria and look at some of those numbers, especially the fixed income market. If I could have that, the fixed income market, how the market traded last week. We know that the fixed income market last week was really on fire. That auction on Wednesday, and then we saw a drive of investors from the equities market to the fixed income market, and then we started seeing the yields drop in the fixed income market. By Wednesday, you know, during the auction, we had it about 19 to 23%, and just about 24 hours after that, it dropped to about 16%. So, you know, whenever there is demand, then you see that at cost. So, a summary of what happened in the fixed market last week. Last week, you see that interbank liquidity was constrained for most of the week. Treasury bills was predominantly witnessed bearish sentiments throughout the week. The federal government bonds market, we know that the Treasury bills was the most attractive last week. The federal government bonds market displayed a bearish stance for most of the week. And of course, we saw that the Naira also had a series of movement also last week. After all of those changes and reforms from the central bank, we saw some positive movement. I can't say that the market, that the currency, that's the Naira, actually closed higher at the close of the week. But anyway, now let's look closer to the fixed income market and see some of those sentiment, perhaps what's already happening intraday with Oladipo Ajayi joining us now. Good afternoon. He's a head fixed income right there joining us. Good afternoon, Mr. Ajayi. Thank you for your time. So last week was very busy at the fixed income market. Tell us, by Friday, what was the picture?
Yeah, last week was very busy on the back of the NTB auction, where the DMO, through the Central Bank of Nigeria, issued about $1 trillion worth of bills. And on the back of that, we saw post-auction demand, most especially on the one-year instruments that are actually printed at 19%. And but as
oh, seems we have a technical hitch right there. Okay. Can you hear me, Mr. Ajayi?
Yeah, I can hear you.
Okay, we lost you for a bit, so please go ahead.
Yeah, I said basically most investors are in the market now trying to cherry pick instruments, most especially on the short-dated instruments. We have been seeing demand on the one-year paper around 16.9, 17% levels. But on the bond side, a lot of traders and investors, they are currently on the sideline, knowing fully well that the trajectory of the market has changed a lot. We've been able to actually see the direction I think the monetary policy guy are going. We already can actually confirm that the MPC guys will be very hawkish. As a result of that, a lot of people are currently staying on the sideline, waiting till post NTB to actually make a decisive decision around market. But as we speak, a lot of people are just staying on the sideline, but people are actually looking at treasury bills for a better yield as we speak.
So, I mean, I know there's another auction coming up, but even now we see that it seems there's a rebound at the NGX. Does it have anything to do with the drop in the yields that we saw after that, you know, very fiery outing last week by the treasury bills?
Well, I think what happened on the NGL last week was a lot of people were actually taking profits, and on the back of, and some people are actually divesting from the equity market into the fixed income market. We saw that last week. But however, we also felt that will actually pose a very attractive level for other people that actually missed the initial rally that we have seen in the equity market. A lot of people are still waiting to actually look at the right time to go into the equity market. Most of the instruments in the market are still very much underpriced, and they still post a lot of value to the market. So a lot of portfolio managers are waiting for that low level where they can actually key into the market. And some of those levels were what they saw in Zenith Bank, Citibank, and sometimes last week, and that's why we saw another level of interest in some of those names. And I think that's what we'll be seeing.
All right, I think
we'll continue to see huge interest in the market.
So the upcoming auction, what do you expect?
Yeah, for the upcoming auction, we are expecting about 240-something billion on the calendar. And if the DMO...
All right.
The situation where this instrument will actually close around 15-16% levels because the volume is not as large as what we saw in the last auction. So when you look at 243 billion, it's nothing compared to 1 trillion. It's just like about 25% of what was offered in the last auction. So on the back of that, there's every tendency, if they maintain the volume on the calendar, the rate will likely close around 15-16% levels.
All right, thank you so much, Mr. Ladipo Ajayi, Head Fixed Income with Chapel Hill Denham. Thank you for your time this afternoon. All right, so Ladi, I don't know if you would leave crypto to do fixed income.
Right.
It seems that's where activities are at this time.
Safe haven.
Yeah, very safe.
At this point. But now,
I know you, and I know that your hunger for profit is very large.
Wow.
I don't know if you will be satisfied.
I didn't know that about myself.
I know. I've watched you.
But we know, we've heard some analysts say that maybe investors in the equities market are moving to the fixed income market, but they say we should wait for a few more auctions before we can
judge. But
I'm going to digress a bit, though. Yesterday was a heartbreaking moment. I want to know how many gallons of tears you cried when Nigeria crashed out from the finals yesterday. Just give me a number.
Laddie, wow. I don't watch football. I don't have the hearts for it, so I didn't cry.
Okay.
I love Nigeria. And I just prefer to stay neutral when it comes to football. Let the best man win, or let the god of football decide who will win. So
and to keep your heart safe.
Exactly. I mean, you know how many people died the other time we played the semi-finals.
Quite sad.
So I mean, I just stayed away from it. We're talking about losses. The sad one that happened on Friday.
Yeah.
That the news got to us on Saturday.
It was quite shocking.
Among others, there were 6 of them aboard the aircraft, even though we talk about 2 of them more, Dr. Wigwe and Mr. Gumbajo. But, of course, we do,
our hearts go out to the family.
To the family, especially for the Wigwes, losing a father, a mother, and a sibling at the same time is such a huge blow.
Massive loss.
A big one also for the business community. It would take a while to get over.
Right. May the souls rest in perfect peace. Thank you so much.
Amen.
And for giving us the
thank
details.
You,
there. Let's take it on to Europe now. See, the EU have reached an agreement on spending rules with the bloc's parliament and member states reaching a deal on reforms to budgetary rules. Joining us now is DW correspondent Chiponda Chimbelu, joining us from Berlin. Great to have you, Chip. So what do the new rules bring?
Thanks for having me. Well, Laddie, the reform aims to allow more flexibility when it comes to defense and climate spending. Basically, the aim of these new rules is to boost investment and at the same time keep spending under control. Until now, government debt rules in the EU have been governed by the Stability and Growth Pact. These rules were drawn up in the 1990s with a goal to limit countries' debt to 60% of GDP and public deficit to 3%. Last year, the average government debt to GDP ratio in the EU was just over 80%. Greece, Italy, France, and Spain were among the countries that were way above the national debt rules that were set in the 1990s. So the revised rules will allow countries with excessive government borrowing to reduce their debt gradually, and they will, of course, also get more time to do that.
And why is this deal so important in the EU?
Well, this new agreement will create a path for countries whose government debt levels or deficits are excessive. This deal is really about updating the EU's fiscal debt rules. And looking at some of the government debt levels that we see, it is quite clear that for many countries, the old rules do not reflect their fiscal realities. Right now, European governments need to invest heavily in defense and, of course, in the green transition. So it has been quite clear that the bloc's debt rules needed modernizing. Negotiations for this agreement have taken actually 2 years. While countries like France and Italy advocate fiscal flexibility, frugal EU countries like Germany have been calling for strict targets to reduce debt. We have also seen this discussion play out here in Germany at the national level with a government debt brake. The rule aims to limit government borrowing to prevent future generations from bearing too high a burden of government debt. But some German lawmakers within the government feel that the debt brake needs to be lifted for the country to be able to tackle the ongoing economic challenges and invest in the green transition. So it will be interesting to see whether the EU agreement influences Germany's debate on the debt brake as well.
All right, Chief, it's a brand new week, so Monday. What can we expect from markets in Europe?
Well, European markets are expected to trade higher today. Laddie, investors are optimistic that the U.S. Central Bank may cut interest rates. And here in Europe, traders will be watching a speech by European Central Bank Executive Board member Piero Cipollone. They'll be looking for signs on which direction the ECB is headed in the coming months. And here in Germany, the focus will be on negotiations between Lufthansa and trade union Verdi. Last week on Wednesday, around 100,000 people were left stranded during a 27-hour strike by Lufthansa ground crew.
All right, thank you so much for the update from Europe there. That was Chiponda Jambelu, DW correspondent, join us from Berlin. All right, let's take a look at some stories now on the African continent. We see the value of dollar deposit held by Kenyans in local banks that rose by 68% to a record 1.55 trillion shillings in the 12 months to December 2023, on the back of weakening of the shilling and accumulation of foreign currencies to cover against unevenly supply from the market. The growth in the value of deposits was indicative of an even mix of exchange gains and introduction of new deposits into the banking system, mainly from corporates, which raised their share of foreign currency deposits in banks to 70% in September 2023 from 56% in September 2019. So the dollar gained by 27% against the shilling last year, having those in its possession a significant capital gain on top of the interest they earn from banks for the deposits. All right, let's head to the debt market now. We see the upcoming launch of the East African Bond Exchange, EABX, in Kenya, sparked a lot of reactions for the country's bond market's potential. But how promising is the outlook? Joining us now is Mr. Terence Adambeza, Chief Executive of EABX Group PLC, join us via Zoom from Nairobi. Great to have you in the show.
Thank you very much. Nice to be here with you today.
Fantastic. So what is the significance of the upcoming launch of the East African Bond Exchange for the East Africa economy, and how is this supposed to work?
I think the importance is the establishment of a new market utility that will enhance the issuance of new securities, which would deepen the debt market, the credit markets here. But critically also is the enhancement of the trading infrastructure, where we are able to ensure that there's greater price transparency on the pre-trade and trade legs, and effectively enhance the the debt markets in this region.
Tell me exactly, how it's going to work here. Are other countries allowed to in this market, or is this just for the East Africa bloc?
So, from an issuance and trading perspective, it will be open to issuers from both the Kenyan and the East African region. From an investment perspective, it's open to everyone participating globally. So you could participate if you want. You'd have to, of course, use a local intermediary to be able to participate here.
Right, and with corporate debt issuance, that's in Kenya, if you compare that to GDP, that's about 0.2%. Of GDP. We have economic challenges and underdeveloped market conditions, in Kenya. It seems this could kind of hinder growth, of this market.
I think there's a lot of room for growth. If you look at the corporate bond issuance, the corporate debt issuance in this market is quite low. As you said, it's easily less than 0.2%. This platform would facilitate the issuance of debt by different corporates and SMEs, if you'd like. And the idea is that their access to capital, to funding, should then be able to support businesses in their growth. So this platform will seek to ensure that there's effective and efficient issuance of securities by various SMEs and corporates.
What are you expecting for investor sentiment, and do you see the EABX stimulating bond market activity in that region?
Definitely it will. As I said, we here at EABX have projected that the size of the debt market should be 3 to 4 times X of what the local debt is. So we think there's a lot of potential. We are currently, if you look at the volumes traded last year, 2023, at close to $5-6 billion, we think the market potential is close to 10 times that. So there's potential. There's potential for deepening of the markets, enhancing efficiency and price discovery, allowing easier access to facilitate trading, and effectively then allowing better pricing along the yield curve for issuers who would want to come to the market.
Talking about yields, what kind of yields can investors expect?
Well, I might not put exact yields for now. Those are market determined, right? So as we go live, we should be able to offer a very transparent process. People should be able to access and view where the market is at any particular time.
Right, and I'm sure investors are counting down to that. Thank you so much for coming on. That was Mr. Terence Adembesa, the Chief Executive Officer, EABX Group PLC. Join us from Nairobi via Zoom. Thank you so much. All right, now let's head on to other markets now. Let's take a look at what's happening in the crypto market. We're seeing a couple of stories there, and the market's not looking so bad from that big jump. Tried to get to $50,000 there, but failed to cross that level, ending at 49,000. That was where Bitcoin could hit. Ethereum, $2,487, also maintaining and holding up almost half of that to about $3,000 per coin for Ethereum. BNB, $317. That's in the red. So we're seeing a pullback today in the market after quite a good week last week, an outing last week. But we're seeing pockets of green, showing that the markets are still getting some attention at this time. Let's look at the top stories now in the market. We'll see right there Bitcoin as the 10th largest asset there, surpassing the likes of Tesla, Visa, and and that's the two behemoths there in the market. Bitcoin there holding that position as the 10th largest coin, $947 billion. That's the market cap there. You're keeping it above, those the likes of Tesla and Visa. Then we see Joe Biden. Laser Eyes, he released a Laser Eyes image on his social media there. And definitely, if you're conversant with crypto, once you see that laser eye, you're showing some kind of support for Bitcoin. So we see Joe Biden did tweet that picture. Some are saying, does it mean that Joe Biden is pro-crypto at this time? or is it just, is he talking about, something else, or trying to get, those that are in the crypto community to maybe vote for him in the next election? So we're seeing a lot of reactions to that there. So there you have it, Joe Biden with the laser eyes, and that's known for Bitcoin maximalists, at this time. Those are the kind of pictures they hold up. Also, you see Ethereum co-founder, he's moved 22,000 Ethereum. Why is he moving that much Ethereum? That's it there, 22,000, lots of money there if you convert that, to dollars. So according to a look on chain, we see Ethereum there moved by this wallet. That's the wallet belonging to Jeffrey Wilkers. He's the owner of the wallet, co-founder of Ethereum. He moved 4,300 Ethereum to an exchange, and the last recorded deposit, that was dated at June 2023. Then he also moved again 22,000 Ethereum, valued at about $41 million at the time. The price was about $1,872 per Ethereum. Let's bring in Rume Ofi now, financial market analyst, to bring us up to speed and help us unpack some of these stories. Great to have you, Rume.
Great to have you too, Laddie. Good afternoon to everyone. And very, very good Monday.
Fantastic.
We lost yesterday.
Yeah, so sad. I'm sure you cried a lot, yesterday when the Super Eagles got knocked out of the final.
For us traders, our minds are already made up, so we hardly get surprised with anything that comes up.
Oh, yeah, you traders are used to losses, at this point. So,
exactly.
Yeah, even though it's painful. Well, it's great. We'll get a better outing next time. Hopefully, we're going to be able to bring it home, at the next one. But talk to me now about Joe Biden's picture. Why does Joe Biden release the laser eye picture? We know that's for Bitcoin maximalists.
Yes, Laddie, the truth is politicians will always be politicians. Considering the fact that it's looking like Joe Biden is becoming very unpopular in the crypto community. In his administration, crypto, Bitcoin, the ecosystem got really attacked using Gary the Gessler, like I like to call him, the SEC chair. So it is very, very, very sad that it happened. A couple of companies right there are going overseas. I think Cochrane last week announced they are leaving the US, and a couple of other platforms with fine here and there. That of Binance and that of Coinbase. We also saw the case with Ripple and a whole lot of, so when it comes to crypto, the US is not a very good destination. So all of this put together, I'm very sure that his advisors, his campaign team must have said, man, you have to do this, and let's see reactions that will come up. But the truth is, like I said, it is very funny, although the industry is grown, so an asset class of that valued about 1.7 trillion. It needs some level of recognition, and I believe coming up in the future, some other countries are going to see crypto community dialogue with them to see the way forward. Going forward, but I really like it. I have my laser eye picture on my phone, and I believe that you still get yours, so that not just being maximalist now, but if you are someone that is futuristic in this industry, you should have a laser eye picture.
Yeah, those laser eyes actually make you look really cool. Maybe I'll try and get one of mine very soon. But now we're seeing Bitcoin as the 10th largest asset, above Tesla and Visa. It's still a young asset class, at this time. What is this telling us? Bitcoin, making it to the level as a 10th position.
It only suggests that the young people are not towing the line of the baby boomers that believes in real estate and the traditional system. The Gen Zs and the more younger generations are going to be going to a more convenient way, a more seamless way to do transactions, and the stage is already set. So rather than go get the physical dollar or do some transactions, you can just use the currency to do payments. It's as seamless as possible and easy as well. So all of these young people obviously are going to grow up to build solutions that is going to make it even more easier for transactions in the future. So all of that is bringing a set of population. Even in our country, Nigeria, even in Africa, you're seeing the influx of people coming, and solutions are being built here and there. So in the future is very important, and that is what is being built right now. And the future of finance is digital, what I always like to say. So a lot is still going to happen. A lot. This is just the beginning.
And definitely, we know that the Bitcoin and the crypto class are very risky segment when it comes to assets. So seeing such a risky asset climbing the ropes at this point and getting to the 10th position, and I'm sure there's expectations it's going to keep rising. Being so risky, how much of an impact do you think it will have the global financial space if anything wrong was to happen with Bitcoin?
So Larry, I think the idea of being risky is just for me throwing the baby away with the bathwater. It's what the traditional media had brand the crypto industry over the years. We've actually moved from that space of saying, oh, this is a risky asset, this is an asset for criminals. I think last week Jenny Healing was saying that crypto cannot be compared to cash when it comes to money laundering and a couple of other things, that crypto is really, really low. But again, the media is saying that crypto is for criminals, or crypto is risky. Crypto is not, the crypto asset market is quite young. There's not a lot of liquidity. That is why it seems risky, right? As time goes on, you've seen the ETF coming in, a lot of volumes are coming. At a point in time, we're going to see all of this kind of volatility. We're seeing sometimes 10% down, 60% down, 30% down, are all going to fall into place. So I'm not going to see all of those extreme volatility. I'm very sure also you are going to be the one on this platform to say crypto is no longer volatile. It's no longer a risky asset. So at some point, I believe all of the other assets are regarded as at some point risky because they were not a lot of liquidity.
But Rume,
as we go further, we'll see more.
But Rume, you saying that we might not see that much volatility, when this asset class actually really matures. But will it still be fun without the volatility?
Yeah, so the reuse case is going to really play out there. Now a lot of people are speculating. It's at the early stage of this industry. And now we want to make all of the money, we want to make 10x, 100x. That's a phase. We're going to get to a phase where utility will be the most important thing. You'll be seeing stuff like RWA, that's a reward asset, I'm also, I mentioned maybe Channels TV could tokenize their platform, where somebody wants to get access, use their token, and a couple of other platforms. We see real life assets being tokenized, and it's going to make things really, really easy. It's going to more focus, what I mean there, to be more utility than price speculation going forward.
Yeah, tokenization really helps for, asset ownership, going forward. But let's look at Ethereum now. We're seeing the co-founder moving a huge amount of Ethereum at this time, 22,000 Ethereum. That's what he's moved so far. What's he trying to do here? Is he trying to sell?
When people move money in crypto as basic as possible, one of the things that we suggest to happen is that they're moving to cash. But adventure is liquidating to cash to do some other things, which also means that we see some movement downwards. When people make profits. So, for example, all of the platforms that are holding a customer's fund, when some of these payments are going to be made. So, for example, if some of these platforms goes down, when price of Bitcoin was 10K and now Bitcoin is 48K, see people liquidating for cash, obviously, that is going to affect the cash, going to affect the price that for that Ethereum is taking profits. But eventually he bought in a more cheaper price. If somebody was buying, if he had bought into that asset or bought the last chunk for price of about 1,300, the price right about now is 2,500. That's a very good massive profit there. Makes sense to liquidate.
Yeah, definitely makes sense to take some profit off the table. Definitely, if that's what he's trying to do. Thank you so much for coming on, Rume Ilfi, financial market analyst. Thank you.
Thank you, man.
All right, let's get a quick check on the gainers counter now. See IMX, Immutable X, that's topping the counter, 9.82%, $2.96, about $3 at this point. Bitcoin Cash, that's holding up at $273, 3.56%. So with profit taking we're seeing today in the market, the gains are looking quite lean at this point. Mina Protocol, $1.35, 2.49%. Let's get a quick check on the losers counter now. Let's see who's top of the losers counter. We'll see Bonk there, 10.10%, 10% down. That's one of the meme coins there. That's minted a lot of profit, in the market there, but we're seeing pullbacks now, taking profit off the table. One of the new ones there, DYM, that's $7.01, down 7.65%. It was newly listed on most of the exchanges there, so we're seeing some traders actually take profit of that. Mantra is also down 6.42% at $2.64. So that's how the markets are looking at. Those are the top stories we're seeing right here on the African continent and globally. That's the show today. Thank you for watching. You can visit channelcv.com for more updates. Thank you for watching again. I'm Ladi Williams, and from me and the team right here at Channels HQ in Lagos, it's bye for now.